I want to talk about civic action and civil disobedience and peaceful gathering that Dr. King was so instrumental in bringing to modern America, and his letter from the Birmingham jail being a classic of why you rebel against unjust laws by a secular state in a peaceful way. So when you talk about protests, I welcome all these protests. I think they're wonderful. I think they're a great part of Americana. What I don't like is when it devolves into riots and looting and more people die, which don't really have anything to do with the peaceful protests against racial inequity and bad racial interaction in our country. And now we've kind of devolved also into very symptomatic of what happened in Iraq in 2003 and what happened in Soviet Russia in 1991, where you're seeing all these statues coming down. And I've got a pretty strong opinion about that. I think there's a lot of common sense involved in these situations. And even though I'm a Texan and Texas was part of the Confederacy, I don't really have a big problem with a whole lot of Confederate statues moving to museums or coming down. I just think they represent a really sad era of American history, and they're symbolic for African-American citizens and anybody who's been affected by slavery and history and all that in such a negative way that I'm not sure I see the value of dying on the hill of those kind of statues. I think you can make a decent argument because of the historical significance for Robert E. Lee or Stonewall Jackson or people like that, but the rest of them, I don't know. I think the one danger here, too, is when we move over into erasing history, not just deciding what monuments and platitudes and other things that we're going to recognize in our society, but where the next generations don't understand arguably the most significant event in American history outside of the American Revolution, maybe, or otherwise you don't have a country. So that's the real danger, where we lose a sense of where we've been. Even when the 5 or so years of where we've been are evil, full of death, and full of sorrow and loss. You've got to study it all. And when you take things down, you jeopardize that. I will say, though, that for me personally, I'm going to draw a line in the sand on taking down Teddy Roosevelt's statue, who's my favorite American president. And I think they were trying to take down Abraham Lincoln's statue recently in some city, which is super ironic. And they took down Ulysses Grant's statue, which is, again, super ironic. And they defaced George Washington's statue, who, yes, he was a slave owner. That's a fact. He also was the first president of the United States and liberated our country. And he also freed his slaves at the end of his life, which is much wonderful rhetoric as Thomas Jefferson threw out there. Jefferson never did. In fact, Jefferson's slaves were sold upon his death because he was so deeply in debt and families were divided. I also want to strongly object to the taking down of the Texas Ranger statue at Love Field recently in Dallas, which many of you all have heard about. And apparently the statue bears the visage of a renowned ranger who also was active in segregation in the 50s. And I'm very sympathetic to not wanting the visage that represents the entire Texas Rangers to be that gentleman because of the complexity and negativity of that period of American history from a racial comedy standpoint. But why not bring another visage out, like Lone Wolf Gonzalez, who was a Hispanic Ranger and a legend, or Leander H. McNelly, who was a renowned Ranger in the 1870s. You know, just somebody different. That statue needs to go back up, in my humble opinion. So I'm just I really wanted to talk about that because I think you almost see an acceleration of devolution of American principles, ideals, and harmony, and it's a sad element of what we're going through right now and what happened to George Floyd. And I think we need to regain our equanimity and our balance in everything. Okay, I'm going to move to the virus. We've all seen in the last couple of days that the infection rate is soaring in mainly red states that have reopened as opposed to blue states that shut down for so long and are only now tentatively reopening. The stock market was down nearly 3% yesterday in a all of a sudden panic over this, although this has been going on for quite some time. And states that have opened are now kind of being threatened with having to shut down again, completely or partially. And I would point people to the fact that although infection rates are soaring, and part of that is definitely due to us reopening back up, not just more testing, it's both, but that the death rate is very low right now. And that's because most of the people infected are our younger people who are taking more risks in what they're doing and how they're doing it. So there's a lot to celebrate in that too. And we absolutely as a country can't close again. So we're going to have to figure out what's going to work a lot better going forward. And somehow social distancing and Anthony Fauci and Deborah Birx and masks have become a political issue. And that's one of the most absurd things I've ever seen in my life. These two consummate professionals in our government are trying to save lives. And sure, some of the things that they're recommending to do go against the economy coming back and unemployment rate going down again and people getting jobs so they don't have to worry about paying the utility bill next month. And there's a very natural creative friction there. But, you know, if you're out in public in large crowded places, I'm not quite understanding why you wouldn't want to wear a mask, not just for your own safety and the safety of your family and your loved ones, but for the safety of those around you, especially the most vulnerable, which have proven to be elderly, diabetics, obese, and apparently African Americans have been much more susceptible. I don't know if that's an ethnic issue or just that they're more at risk and in communities that are more at risk. I'm not sure why, but the statistics are overwhelming that African Americans have been falling prey to this pandemic at much higher rates than Anglos, and Hispanics at higher rates than Anglos as well. So can't we all look at the common good and take very, very reasonable, wise precautions as to how we're living our lives, especially if we continue to open up? Isn't it just common sense? And if we are going to open up and maintain that, we've got to keep the infection rates from going exponential again. And we've got to avoid extreme loss of life so people can get back to normal. So I'm going to pivot from that to the economy. I don't think that we're going to have a V economy on Main Street. We've had a V recovery in the stock market so far. Whether that's able to be continued or not is yet to be seen. But we're going to have a long, hard recovery across the mainstream economy. And there's going to be some industries which we're all familiar with: travel, leisure, hospitality, restaurants. You could go on and on with several of the industries that are directly affected so significantly by this. It's going to be a very slow recovery, and they're probably not going to look quite the same for some time to come. Airlines versus some of these new industries that popped up. And I mean, you look at Zoom, and who hadn't been on a Zoom call yet? We've kind of all been on Zoom calls, and that crazy stock has just about tripled this year. It's crazy. And then you look at some of the tech giants, and you know, people have been saying they've been overpriced for a long time, and yet they just go higher and higher and higher because their competitive advantage and the strength of their corporate might from an earnings and balance sheet standpoint are so significant that it's you almost want to pay a higher price for them. Small retailers, mom and pop shops that are selling small items, bookstores, you know, a lot of the small retailers are going to not survive, to just be plain, or have a really hard time surviving, versus the Walmarts, the Costcos, the Home Depots of the world that will just gain strength. So the Main Street economy, I don't know if it's a swoosh or if it's an L or if it's a W, or pull out any cliche symbol you can think of as to what's going to happen, and I don't know. I just would bet strongly against a V. I think it's going to be hard for some things to come back super quickly. And you look around the rest of the world, my wife Gretchen and I and our kids were supposed to go on a missions trip and then a safari in South Africa next month. And, of course, it was canceled, and they're not even letting foreigners travel to South Africa right now. And I looked at South Africa was locked down for 3 months, and now it's tentatively opening back up again. And they've gone from about 10,000 cases of the virus to over 100,000 in about a week and a half, and from a couple of dozen deaths to over 2,000. So you look around the rest of the world and other countries that are much less balance sheet rich like we are or like the Chinese are, and there's going to be some countries that are really have a lot of horror coming. Death, starvation, disease, lack of work, budget deficits. This is going to be a long haul to get out of this. And yes, when we get a vaccine, whenever that is, and Dr. Fauci is now predicting early next year, that's going to make a big difference in helping us. And when we get a medical treatment that isn't a vaccine but ameliorates the causes of this horrible virus significantly, that's going to help a lot too. But the timing's uncertain, and we're all going to have to be pretty patient. I want to go to investing now in the stock market and then briefly turn to politics and then open it up for questions. You look at the stock market, and the NASDAQ hit a new record the other day at over 10,000. But if you take a 20-year view of the NASDAQ, in March of 2000, the NASDAQ hit a little over 5,000. So putting aside inflation and dividends, and NASDAQ stocks don't have very big dividends, so that they're pretty irrelevant. They're probably even less than the rate of inflation. You basically doubled in the NASDAQ over 20 years. And you use the rule of 72, which means you divide 72 by the number of years it takes for a double, and that gives you your annualized rate of return. Some of you all may have heard that. Some of you may have not. You get a 3.5% annual return on the NASDAQ from March 2000 to June of 2020. And I'm not trying to come across as negative about the public stock market, but that's a pretty low rate of return. So your point of entry on a security and on an investment, whether it's an individual stock, an individual bond, or the market as a whole, is of critical importance. So those folks out there buying Microsoft at 45 times earnings and Amazon at 150 times earnings and Apple at 30, 35 times earnings and thinking they're just going to grow to the sky, I'm not going to bet with you on that. They may continue to go up, and they're very likely as such significant companies to make good money going forward, but the rates of return are not going to be 15, 20, 25% a year like they have been for the last decade. They're going to probably be in the single digits. You look at the wild ride Microsoft had from 2000 to 2020. It peaked at 59 in 2000 and didn't recapture 59 until 2017, 17 years later. So you basically had a flat to negative return in Microsoft for 17 years. But if you owned it at 58, 59 in 2017 and you held it till now, you've more than tripled your money in 3 years. Think about that. So that shows that to do super well in the stock market, sometimes you need a really long period of time. So if I'm an investor today, I'm looking at the stock market and I'm thinking we're kind of in a nifty 50 era again, where stocks are priced for perfection, the big ones. Those of y'all may remember the early 70s, right before the stock market took a severe hit, and you had Kodak and Procter & Gamble and many other large, significant U.S. companies, Polaroid, trading at 50 times earnings and more. And a lot of those stocks never reached their heights again, and for many of the others, it took many years. I think we're in a similar situation now. And so I'm not advising investors to abandon the FANG stocks or some of the new information technology stocks that are doing so successful. But I think you have to have a barbell approach. I think you need to have exposure to some of these stocks, but also exposure to value stocks, which are the most out of favor as they've been in the history of the dynamic between value and growth stocks. And some small cap stocks, which have lagged the market. The big mega cap stocks have dramatically outperformed. And then some international exposure, because international stocks are much, much less expensive than U.S. stocks. And then I would really emphasize midstream oil and gas securities as well. They've had a big run off the bottom now, but you've got to move energy supplies around. You have to do that. And the yields are so high and the prices are still significantly low. And I would especially focus on natural gas midstream transportation securities, because gas demand has fallen off significantly less than oil demand, and there's more strength there. And with the supply of oil and supply of gas coming down in the interim, it's what's created a lot of the negativity. But when the economy does recover, we're going to scramble like mad to provide enough energy sources to run the country from an automobile standpoint and an electricity standpoint and a heating standpoint. And all those companies are extremely well positioned to do well in the future. Let me turn to private equity just real briefly, because a lot of you all know that we focus a lot on private equity and private investments, and I don't think there's a whole lot of opportunity just to be playing in private equity today. There's over $1 trillion of uncalled capital that can be thrown at deals, and the level of uncertainty in the marketplace is so high. And typically private companies, for the most part at least, tend to be smaller than public companies and not as strong financially. And there's been a historically high rate of leverage used to buy and grow private companies in the last 10 years because of all the easy credit after the Federal Reserve took interest rates to zero. So I think investors have got to be super, super cautious and wise about how they deploy money into private investments. We lately have been looking almost exclusively at private credit, where you go in and you lend money to companies and you get at the very top of the capital structure, either by buying bank debt or buying senior debt in companies and earning low to mid double-digit returns, hopefully, if things don't turn too sour, and being way ahead of equity holders in the capital structure to where if anything does go wrong, you get paid first. And that makes a lot more sense to us these days than just outright doing private equity investments themselves. And you can still look at growth private equity, but it better be in a sector that's exploding from a growth standpoint and that the virus isn't going to have a significant impact on. And you better be super selective. And then finally, we're looking at secondary private equity, where you try to buy interest in private companies and private equity funds such as Blackstone, Apollo, KKR, Bain Capital, Texas Pacific Group, at significant discounts to what the initial investors paid for those stakes in those funds. So trying to buy a dollar for 80 cents or 70 cents or 65 cents, we think that strategy makes a lot of sense over time. I'm going to turn to politics and policy real briefly, and then we're going to open it up for questions. The last 6 months politically have been some of the most wild, out of control, tumultuous times any of us have ever seen for our country. But the last 3 or 4 months for President Trump in particular have been horrifically volatile. And I think if he loses the election, which right now it looks like he's going to do, you've got to look back to that 45 days from late January to early March where he was extremely dismissive of the risk of the virus. And yes, we did shut off travel to China. And yes, we did eventually shut down travel to Europe as well, which were very wise and important things to do. But we missed a real opportunity to ramp up production of masks and to encourage people to more socially distant and to really shut down social interaction more quickly so that this was taken more seriously. And if he loses, I think that might be the trigger, because the virus, it's unquestionable that the virus ended up being a much bigger impact on the economy and on the well-being of our fellow Americans than if we had been more cautious early on. Americans are also tired of listening to Donald Trump air his personal grievances against his perceived enemies over and over again, instead of having a tremendous lack of empathy for families who've lost loved ones and for the rage and anger at racial tension that's been going on. It's hard to understand how you can't lead from empathy and still be strong. To be a strong leader, you don't have to act like a strong man or strong woman all the time. It's okay to say, I feel what you're going through. I'm with you, and we're going to get through this together, and provide people a sense of optimism even in their sadness as we go through such a tough period. But having said that, 4.5 months is an eternity in politics. So much can happen between now and then. I would have to say that if I had to predict today, if the election was going to be held today, I think the Republicans would lose the Senate. I think Democrats would keep the House, and I think the president would lose, and former Vice President Biden would win. And if that actually happens, you have to take a hard look at how you're going to structure your affairs going forward from a tax standpoint, if you're a business person from a regulation standpoint, and how much you can expect in economic growth, in opportunity, estate planning for those people who are trying to look at how you structure your financial affairs in the future for your family and for your heirs, how emphatic people are going to be about clean energy and how they're going to feel about fossil fuels. And also, as many of you all asked before this call, about federal deficits we're running up every year and the federal debt and what that's going to do to growth and what's it going to do to the credit worthiness of our country. But like I said, 4.5 months is an eternity. And what you're seeing in woke America with taking down Teddy Roosevelt and defaming George Washington, not defaming, but marring his statue. And with all the lack of open-mindedness and true liberalism in terms of classical liberalism and open thought in what we believe and what we think as Americans, and some of the anger that's being directed in such a destructive and vitriolic way, could that save him and give him a second term? Maybe. And does this silent majority that he and Richard Nixon, which is not a healthy comparison for President Trump, but he and Richard Nixon keep talking about, does it even exist anymore? And how many people are going to show up and vote? How many people are going to stay home? Well, in less than half a year, we're going to find out. And it's going to have a big impact on how we deal with the virus from 2021 on and how the economy recovers and what the quality and happiness of our lives is all going to look like. So strap on for the ride, get ready, and let's all meet it with excellence and resilience and ambition to overcome all these factors as a country and as a state and as a people going forward. So with that, I'll stand down, and we're going to open it up for questions.
Great. Thanks, George. For those of you on the line, we're going to transition to the question and answer portion of the call. So right now we're going to transition to that. Great. So as you heard, if you have a question that you'd like to submit to George, you can press *6 and you'll be added to the queue. We did have a few questions submitted in advance of the call, so I'd like to start, George, by asking you a question from B. Lane Carrick. He requested you answer, with stocks trading near all-time highs, even in spite of COVID-19, and bonds trading near all-time low, where are you finding the best opportunities to invest?
Yeah, we covered that a little bit in the introductory remarks, but I would just say that investors can afford to be patient right now. And if you own bonds, which you probably should, frankly, even with interest rates as low as they are, because they're just so much safer than stocks, you want your duration on your bonds to be incredibly short. So if interest rates do come back at so much, you don't get a loss of principal by the rate of interest going up, which drives the price of a bond down. So you really want to own, for the most part, short-term corporate paper, corporate bonds, mortgage-backed securities, which will give you anywhere from like 1.5% to 3% yield on a 2 to 4 year piece of paper, and you want a diversified portfolio across that. You don't want to remain in cash except for the cash you need to go about your daily living expenses or your obligations, because you're going to earn zero on that right now. But you want to avoid credit risk. You want to have an investment-grade quality portfolio, and you want to avoid duration risk and the risk of interest rates going back up. In stocks, I would be super patient if I were an investor. And I spelled out some areas that I would be attracted to myself a minute ago. But I would also take your time and make sure your allocation to the stock market is what it should be, whether that's 100% of your portfolio if you have 90 years to go, or whether it's 10% or 20%. Everybody's got a different allocation that works for them. And if you're off of that allocation, I would reset it to meet what your allocation should be or adjust it to what it should be. And if you want to add more to stocks because you feel like you're underweight stocks, I think you're going to have opportunities to do that because of all this volatility at hopefully lower prices than where the market is today.
Great. Thank you. Just as a reminder for those on the call, if you have a question that you'd like to ask George, you can press *6. George, our next question comes from Clyde Jackson, and you touched on this a little bit, but what are the medium and longer-term consequences of the enormous federal debt?
Yeah, and I think my dear friend who I admire tremendously, David Thompson, asked the same question in the pre-questions, and I want to give a shout-out to Clyde Jackson. Clyde has been my partner in crime at Sky Ranch U Trail for Christian Family Camp for almost 20 years now, and Clyde's been chairman of the board of Sky Ranch Christian Camps for, I think, over 30 years, and he lives next door to my mom. So we're very grateful for Clyde and Betsy and his efforts in Kenya to support orphans and the less fortunate in Africa, and all he does with Sky Ranch, and for he and Betsy being great neighbors to my mom, and him building an incredible real estate company with his family over the years. So shout out to Clyde. I think that the federal deficits we're running and the federal debt, which nobody cares about right now, is going to slow growth in our country for at least the next decade, if not more. And eventually, if interest rates go back up, you really face a conundrum on how you're going to meet your interest obligations on all that debt. And it's imperiling the future of our children and our grandchildren and our great-grandchildren, and nobody really cares about it. And if you could really throw an arrow at Donald Trump as president on economic policy, he's done a lot of stuff that's been super great from an economic policy standpoint. But if you look at the debt, he basically said, I'm not going to touch entitlements and we're going to protect our seniors, which is a very political thing to say. And now we've run up all these trillions of dollars in deficits through tax cuts, increased defense spending, increased overall federal spending. And now the pandemic's costing us trillions of dollars more. So I'd love to be able to give a real positive response to this question, but I don't have one. This is a serious problem. And the only way that you preserve this country and avoid a hard or soft default on our debt in some point in the future is you've got to reform entitlements. You've got to keep your commitments to seniors today. But for those of us who aren't seniors yet, but will be in the next 10 to 20 years, we're going to have to take, excuse my crass expression, but we're going to have to take a big hickey on what we get as benefits as older people, or otherwise our country fiscally and financially is not going to have a happy day at some point in the future. So it's something we all should be very concerned about. And whether you're a Democrat or the Republican president or the Republican Senate, nobody's really cared about it the last 10 or 15 years, and that's going to have to change.
Great. Thank you. One more reminder to press *6 if you have questions. We're going to take the next question from Darren Goroff, who asked very simply, where do you see oil in 6 to 12 months?
Well, if I could predict where oil was in 6 to 12 months, I think I'd go borrow a ridiculous amount of money and place my bets accordingly. I'm about as good at calling oil and gas prices as I am at predicting interest rates, the weather, or inflation. So I don't have any idea where oil or natural gas is going to be in 6 to 12 months. Having said that, I think that we're setting ourselves up, and I've talked to a lot of people smarter than me in this industry who feel the same way, for a huge problem from a pricing standpoint in oil in 2 to 3 to 4 years. Sometime in that time frame, I think we've cut supply so dramatically to meet with the loss of demand from this pandemic that when demand does come back, which it will, somewhere between 95 and 105% of where we went into 2020 on, that it's going to be almost impossible for shale and OPEC and all the other major producers around the world to produce enough oil with all these dramatic cuts and with all the projects that have been postponed in the last 4 or 5 years, the big projects that bring in big oil. And I think we're going to see $80 to $120 oil again. But that's 2 to 4 years out. The next 6 to 12 months, I think we're going to flop around between 25 and 60. And I know that's a wide range, but I just really don't know what next year's going to look like. If you tell me we've got a vaccine next year, I'd argue more for $50, $55 oil than 25, but I don't know that. And I think natural gas, where demand has come off much less than the demand for oil has, and where supply is coming down pretty dramatically, is going to trade north of $3 a foot next winter when things get cold again. But I think natural gas long-term is not going to see the spike oil is going to see. There's just too much of it. Where it's priced at today, gas producers can't make any money. In fact, they're all going to go bankrupt. So that price is unsustainable. But if you get gas in the $2.50 to $3.50 range long-term, that's still a very, very cheap commodity, and it's the best way to heat and power our homes and our factories and our companies. And that's kind of the range it needs to be in to sustain a productive U.S. natural gas industry and also have consumers and businesses have low enough gas prices. And that's where it needs to settle. But I don't think it's going to expand a whole lot further out of that range.
All right. One more question before we open it up to the queue. So this comes from King Crow. Give us the various prognosis depending on who controls the White House, Senate, and House.
Yeah. So, King, I owe you a phone call, by the way. But I don't think the prognosis is good. I think we're going to have to refine the tenacity and the American resolve to win that we had in the Depression and in World War II and in the Cold War. And, it's funny, I'm embarrassed to say it, being a history major at the University of Texas, that I had either vaguely heard of the Spanish pandemic and ignored it or hadn't heard of it at all. Because we were all so focused on World War I, and it happened right at the tail end of World War I. And if you believe the statistics and it shows how imprecise our data can be sometimes, that somewhere between 50 and 100 million people died from the Spanish pandemic. That's more than died in World War I. And I've read multiple books and seen multiple movies of World War I, and I've barely or not heard at all of the pandemic. We just went through the greatest period of affluence following the Great Recession that this world has ever seen. And there's more wealth in the world than the world has ever seen, even after the pandemic. But as a country, I think we've kind of gotten soft. And our level of endurance and our level of resolve to meet tough times and tough situations has diminished. And we're going to have to recapture that. If former Vice President Biden, who, I've only met him one time in my life, but he strikes me as a pretty nice guy. But a guy who's almost 80 years old, and who a lot of the more radical elements of his party, if you don't believe in socialism and don't believe in kind of these enemy version of if you're not with me on all my issues, you're a bad person. I think a lot of the more extreme elements of the Democratic Party are going to be running the government, and they're not pro-business. And, you hear Alexandria Cortez talking about, if some businesses fail during this, or if Amazon doesn't come to New York and create 25,000 jobs for New Yorkers, it's something to celebrate. This isn't optimistic for how businesses are going to do in that kind of structure governmentally. I think businesses are going to have to batten down the hatches and tighten up their expense budgets and expect lower revenue growth and lower profitability and a lot of government regulation and red tape and opposition. And we as a country are going to have to try to find a way to unify ourselves when there's so much hostility and negativity out there. And that's going to be a challenge. And I think those of us who live in red states, and whether you're an independent or Republican or you're just not a socialist, you're going to have to man and woman up, so to speak, in terms of dealing with these kind of factors, and just try to weather the government that's going to be in Washington the best you can. If the Republicans maintain the Senate, regardless of who's president, you're going to have kind of a firewall there, or the cooling of the saucer in the tea, the tea in the saucer, as George Washington used to call the Senate, and its impact on legislative politics, and prevent a lot of the anti-business stuff that would otherwise come through. If Trump is the president instead, I don't think that the Republicans have enough strength to retake the House this election cycle. But if Trump somehow pulls it off and remains president, you're just going to see a whole lot more division between the left and the far left and the far right. They're just at war with each other. It's really unhealthy for the country, and it's really unhealthy for those of us who look at ourselves as more practical, reasonable, and open to different ideas and concepts out there in the country. And I think we'll have another 4 years of. I've got a kick out of reading Maggie Hagerman, who's one of the big writers for the New York Times, who's very left-wing clearly, and has written a lot of critical things about Trump. But she's a pretty good reporter and is pretty factual in the way she lays things out. And she said she's not sure she can take another 4 years of Trump. It's just so exhausting because things are just so volatile, and they're just so emotional and so much negative energy. And we're going to have to find a way to deal with that as a country because it's not going to change any. It's been very clear that he's never going to stop tweeting and he's never going to stop doing his business the way he does it. But I would say if you believe the courts should stay out of the way of the legislature and out of American society and interpret the laws as they were as written instead of making the laws, then he's going to appoint a lot of judges that'll adhere to that. And even in that instance, we saw a Bostock opinion last week out of the Supreme Court that a lot of people view as very dangerous for religious liberty. And a lot of people claim that Judge Gorsuch, the new appointee, Trump's first appointee, Justice Gorsuch, basically legislated and basically made up law because he wanted to get to a certain outcome. And that echoes the Ruth Bader Ginsburg's and the Stephen Breyer's and the more progressive justices on the Supreme Court. So just because you get a Republican appointee doesn't mean they're going to be super conservative all the time. I mean, but you'll probably get more good judges than bad across the federal judiciary, and that'll probably be good about the judiciary staying out of the way of the legislative branch and the economy and the executive branch. And you're also going to get a lot more pro-business policy. So just from a pure business standpoint, Trump re-winning election and still having the Senate would be good for the country from a business standpoint. But societally, it's more questionable. He just really divides the country.
All right, so we have one question in our queue that we're going to go ahead and take, and we cannot see the name of the caller, so we're going to go ahead and put you on the line and ask that you introduce yourself and ask George your question.
George, it's Bob Jones. George,
hey.
It's Bob Jones.
Hey, Bob.
I appreciated the conversation today. You didn't say anything about all the things that Trump has done financially to backstop the market, which is why I think the market has risen like it has. I mean, we've printed money, we've guaranteed bonds, the Fed's buying bonds back. There are a lot of things that are artificially pushing this market right now, and I'd be interested in what your take is on that.
That's a great question, Bob, and thanks for taking the time today. And I think the question you just raised sums up how complicated President Trump is. Because what President Trump did that has really backstopped the economy, and I think it's objective that he's done this, is he's cut regulatory red tape dramatically. He's been a big cheerleader for business. He's cut corporate tax rates dramatically. Just think about if corporate tax rates were significantly higher still, what that would mean for employment right now and corporations trying to retain jobs when otherwise they wouldn't be able to. So he's done a lot of things on the fiscal side and on the executive branch side and gotten stuff through the Congress that are really helping us during this crisis. But at the same time, and I think it's fair that he criticized Jerome Powell, the Federal Reserve Chairman, in December 2018 for raising interest rates too much. And I think he was right. He was pretty vitriolic about it, maybe not quite fair in the way he went about it. But to Chairman Powell's credit, Chairman Powell immediately took back that rate increase and then slashed rates. And when the pandemic hit, he took the most decisive action of a Fed chairman in U.S. history. He immediately cut rates to zero. He immediately said the Fed had pretty much unlimited powers to print money and to inject funds into the economy and to buy every asset on God's green earth as long as people let him get away with printing money. And that's what he's doing. And I thought Ben Bernanke and Hank Paulson and Tim Geithner during the Great Recession also did a spectacular job. But they took well over a year before they took decisive action, and the economy was in a complete free fall until they did that. This time around, Chairman Powell just jumped right onto it, which was incredibly wise and incredibly decisive, and I think he deserves a ton of credit. And I think he deserves more credit than the president in terms of propping up the economy. But long term, the Fed having its hand on the back of the economy and preventing the economy from falling over and going comatose has a cost, right, which is what you're pointing out. We're going to add $4 to $6 trillion to the federal debt as a cost of that. And everyone knows that eventually, if you just print money forever, you are going to have inflation at some point if you keep doing that. So our fiscal situation as a country is broken. If you look out 30, 40, 50 years outside of entitlement reform and a whole lot of spending cuts, we're broke. And so in the coming years, we're going to have some very, very hard decisions to make on taxes and federal spending, and a lot of that's going to be a brake on the economy because it just inevitably slows growth, and we're going to have to deal with this debt. So the sugar high we're having right now that's preventing us from falling over as a country economically does have a very significant cost, and it's going to be heck to pay the next 10 to 20 years. Thanks, Bob.
Well, that's it for our questions. So, George, do you have any final parting thoughts for the folks on the line?
I just really appreciate everybody coming today, and I hope you found this beneficial. And if some things aren't beneficial, or you have other things you'd like me to talk about that you think would be beneficial, please send me a text or an email or call me up on the phone and let's discuss it, because I love doing this and I love interacting with everybody, and it's a nice way to split up the day a little bit and not stare at the screen for 12 hours every day. And I want this to be productive and useful for everybody. So don't hesitate to contact me with that. And thanks again for taking the time. It's been great to have you here.